Hi there, and thank you for joining us here at PhillipCapital's Market Watch. I'm Sze Han, Assistant Manager from PhillipCapital's Contracts for Difference, CFD. For the episode today, we'll be casting the spotlight on the Japanese yen and reviewing the factors that may affect its rise or fall in the coming months. So we begin here with this chart that shows the price movement of the yen against the US dollar. From the chart, we see that in the last 16 months from March 2022, the yen had traded down against the dollar by more than 30%. So what is causing this drop in the yen's value against the dollar? For starter, the US Federal Reserve had been hiking interest rate aggressively since March 2022 to curb US inflation, which was already at a multi-year high, from rising further on the back of a very robust US economy and strong US labour market. By hiking interest rate aggressively, the Fed had hoped to cool down the US economy and bring inflation down towards its long-term target of 2%. And over the same period, the Bank of Japan, BOJ, in contrast, had continued its very unusual policy of maintaining interest rate at negative 0.1%. The reason for this is because the BOJ believes that a negative interest rate policy is still necessary to encourage spending and investment and to inject vigor into Japan's economy. This divergence between interest rate policies of the US and Japan, however, means that investors can borrow the yen cheaply and then use the borrowed funds to invest in US dollar denominated assets for higher returns. In trading, this play on the interest rate differential of two currencies is known as a carry trade, and it is the main reason that people have been selling the yen in favor of the dollar. At the time of preparing this presentation, the yen was trading at above 145 to the dollar, very close to its last peak of 152, and from a technical analysis perspective, the dollar-yen pair is approaching a key level of resistance, and speculations have been mounting that we may begin to see some sort of price reversal. So one factor that could cause a rapid intraday price reversal is the BOJ's intervention in the forex market. In September and October last year, for example, after BOJ interventions, the yen had registered sharp intraday rallies. So while weak yen is generally good for Japanese exports and tourism, should the yen continue to weaken further from its current level, it could be deemed as excessive weakening, and the BOJ could step in to bolster support for the currency. One key benchmark zone to watch out for possible price inflection will be the key levels around 150 to 152. While supportive action from the BOJ could provide some relief for the falling yen, the inflation situation in US and Japan and how the Fed and the BOJ guide and execute their monetary policy decisions in the coming months will be the greater determinants of where the dollar-yen pair may be headed next. At the Jackson Hole Symposium that ended recently, Fed Chair Jerome Powell had commented that the US interest rates are likely to be maintained at current levels and may even rise further if inflation in the US remains sticky. And in Japan, although the annual inflation rate in July came in at 3.1%, it is likely that the inflation rate will trend down towards the end of the year. As such, the BOJ is likely to stick to its current monetary policies. So recent commentary from both the Fed and the BOJ suggests that conditions to drive a fundamental change in direction of the dollar-yen pair are not yet in place. And until we begin to see a shift in the policy decisions of the BOJ and especially the Fed, the current weakness of the yen will likely persist for a while more. If you are planning to trade forex pair, you may do so using a Phillip CFD account. Here at Phillip CFD, we offer 39 currency pairs for trading. And as part of our ongoing promotion, from now until 29 September, execute at least 8 FX CFD trades and you'll receive 20 CFD cash credits. And that's all for this episode of PhillipCapital's Market Watch. If you have enjoyed today's video, please click the like and subscribe button, and don't forget to switch on that notification bell to receive alerts for new episodes. Thank you, and we'll see you again in our next video.